Right, good evening, everybody. How are we? Right, let me just turn these up. It's a bit dark. All right, I think that's a little bit better. Please do let me know if you can hear me clearly. You can see me clearly in the comments here. That would be very, very helpful. Welcome. Hope everyone is well. I can see that there's a number of you on here already. Apologies first and foremost. I wanted to do like a live stream middle of last week, and things just got way out of hand, way too busy. So I thought I would literally come on this evening, have a little chat. I'm sure that there will be lots of questions around what's going on with the markets at the moment. We're going on with crypto at the minute. It feels as though everything's kind of turned on its head almost from speaking to people in my members group. And I think maybe now is just the time to kind of take stock of where we are and answer some questions and perhaps have a little conversation around what's going on at this point in time. So I know that there are already some questions in here. We'll get to those fairly shortly. I have some very exciting news to announce maybe in the next week or two. And I'm very, very excited about it. And to be honest, who would have thought this kind of opportunity would come along from YouTube of all places? And it's very, very exciting. It's very much in line with what I do here, why I'm here, and the purpose of what I hope to change in the world of finances, essentially. So more information on that maybe in the next week and a bit. There will be another live session marathon on June 12th. I'm just waiting to finalize one speaker for this because I want to do a marathon, which will be 5 hours long. We're going to be talking about property, talking about crypto, talking about Forex. We'll be talking about property, and we'll also be talking about the stock market as well. We'll have guests on from different YouTube channels, investment managers, that kind of stuff. So that's going to be happening in June. I'm waiting for one person to confirm. So once I've got that all confirmed, I will start to push this out on the channel in the community section a little bit more and talk about it a little bit more in the videos as well. So with it being a 5 hour session, I'd hope to see as many people there as possible. And it will be a great opportunity for you guys to be able to listen to other people's perspectives and other people's sort of views, tap into their expertise as well. But that will be coming fairly shortly. Right. Let's crack on with some of these questions and let's see what we've got in here. All right, so there's one from Kiki here. You put this in before we went live, so I can't bring this up on screen like I normally would do. So what you're basically saying here is the S&P is down to 3,100. It's 40 to 50% correction. What do you think? Is it possible in the next 2 months? Quite possibly. I think a lot will depend on inflation numbers and some of the numbers coming out from the States, whether the Fed moves on interest rates. If that does happen, then I think we're going to be in for a really, really bumpy ride. So I think at the moment, whilst we don't know that for sure, and it's all speculation at this point in time, I think if you look at people like Michael Big Short Blurry, and if you've not watched The Big Short, that's definitely a film that you should definitely go and watch. Michael Blurry has got a huge bet against the US economy right now. He's got a few options out on 10-year treasury bonds because he just believes that interest rates are going to go up and the markets are going to take a tumble. So if he is right, like he was right back in 2007, 2008, we could be in for a very, very bumpy ride. I would say, though, if you are just starting out investing, this is where a lot of the stuff that I've been speaking about since the dawn of this channel, not putting all your eggs in one basket and not being exclusively exposed to individual stocks is going to be very, very important. This is where your investment strategy, whether you're in index funds, whether you're in ETFs, whether you're buying exclusively stocks in companies directly, whether you're passively managed in terms of your investment approach or actively managed, this is where all of that information and all of those ideas start to really come into their own, because every single person watching this will be on their own journey. My approach isn't going to be right for you. Your approach isn't going to be right for me. And if you are just starting out investing, it's really important that you are confident that the approach that you have works for you. And that is particularly important if you've started to panic because the markets have trailed off over the last 3 to 4 weeks. I mean, it hasn't been pretty, and we could be in for more of this. So we don't know what's going to happen. Possibly it could, but who knows? Rain here is just saying that hedge funds are liquidating. Yes, some of them are moving out. Some of the smart money is moving. There is speculation that they're going to be rotating into value stocks, into the big boys, essentially, which is why I made a couple of videos over the last couple of weeks talking about, are you exclusively in growth stocks, or are you in a portfolio? If you have picked your own stocks, have you got a good foundation within your portfolio with some value stocks in there, the likes of Coca-Cola, Apple, all those kind of people? That doesn't mean that you're going to be completely immune from markets going up and down, but hopefully what you should find is that in these value stocks, their share price won't be as volatile as some of the speculative growth stocks out there. So in difficult markets, it's going to test your investment strategy. It's going to test everything that you thought you knew. It's going to test the way you think. It's going to test the moral fiber of whether you actually believe in the companies that you've bought. And it's really absolutely going to test whether everything that you espoused or thought to be true in terms of being comfortable if your portfolio were to drop 10% is going to test that. It's really, really going to test that. So it's crucial that you're happy and you're able to, kind of like reflect on your investment approach and make sure you're happy. If you're not, make appropriate adjustments if you see fit. Right, let's have a look and see. Right, I'm now onto the ones that came in literally just after the stream started. So I'll be able to pull these up on the screen now. MC, thank you very much for joining us. COD Basics. Let's have a look at this. I worry about being able to sell in the short AMC short squeeze through trading 212, but think it's only risky time to switch to ISA. I'm not sure. Bear me 1 second. Let me just increase the size of this again so I can make sure I can actually get that properly. I have a worry about being able to sell in the short AMC short squeeze through trading 212, but think it's risky time to switch ISA. Thoughts? I don't really what you mean at the first bit, mate. But is it a good time to switch your ISAs? If you depends what you mean by switch. If you're going from, what do you mean by switch? I need to know what you mean by switch, COD. Do you mean from provider to provider, or switch your ISAs in what way? If you're looking from provider to provider, they'll have to sell your portfolio down. It depends how you've invested. If you're an index fund or individual stocks, there's a number of things in there. So I need a bit more clarity. So what do you mean by switch, mate? Greg Robson, welcome. Bobo, welcome. Good to see that you guys can actually hear me. Manolis, how you doing? Money, whiskey, and coffee. Please talk about. All right, okay. So this will be an interesting one. I'm sure that this was going to come up. Please talk about XRP Coinbase, aka crypto. All right. So crypto at the minute. If you're in crypto, you know what? It's really, really funny how quickly things can change within the space of maybe like a week or so. Because if I think back to maybe 2.5 weeks ago, everybody was going on about crypto. Crypto was the place to be. Everything was going to be shooting up. Everybody was going to be making millionaires left, right, and center. It only takes, you can blame Elon for this, tweets, press releases, all this kind of stuff for all of a sudden for crypto to turn on its head. And I think this is kind of like a cautionary tale. Whether it's crypto, whether it's the stock market, it is paramount, absolutely paramount, that you never, ever, ever invest off the hype on off news, like ever. You really have to understand what it is that you're doing. Because if you've just got on board, Ethereum and Bitcoin and all these coins, Shiba Inu, right? Just because it was all over TikTok, and TikTok, oh my God, there's so many crypto experts out on TikTok right now. If you got on board that stuff without really understanding that, this kind of stuff could turn on its head on a dime, then you're probably hurting right now. So it's really, really important to see, what happens and what can happen in the crypto space. In terms of XRP, I know that they've still got that thing going on with the lawsuit at the moment in the States. I haven't really kept up to date with what's going on specifically. And Coinbase with the whole HMRC and the taxation side of things, there is a lot of news coming out of the States at this point in time around what the Fed are trying to do with the taxation of crypto. Yellen and Jerome Powell are really, really pushing for some legislation around crypto and being able to tax crypto properly. And I don't know whether that's going to be something that they can pull off, but if they do manage to pull this off and they do manage to get taxation, I think the next thing will be regulation. And what that actually then means for the crypto market, I don't really know. So I'm not a crypto expert. I've said this before. I will say this again. I'm trying to get one of my friends who is a crypto expert, but he's in the States. He's a very, very busy guy. I'm trying to nail him down to come onto a live just like this to talk specifically about crypto. But it feels as though at the moment we've got a little bit of a pullback. Is crypto going to be here for the long term? Yes, obviously it is. There are a lot of people who are speculating that it's still going to hit, 500,000 per Bitcoin. There's a lot of growth. Ethereum has got the second version, version 2 or 2.0 coming fairly shortly, which will greatly reduce things like the gas fees and things like that. So I think with cryptos, the big coins, and I'm not talking about the altcoins here, the other stuff, you talk about the more established coins, they are going to be fine. I think it's just about making sure that you've got the appetite for the ups and downs in the crypto market. And, if you are buying the dip, make sure that you're buying the dip in full confidence that you're okay holding it, and you're okay in the fact that if it continues to go down, you're not going to absolutely panic, as with all things. So let's have a look at this from Duncan. Hi, Pete. I started investing in April, Tesla, AMD, Visa, Vartax, Twilio. I'm down 18%. I'm holding long term. Love your channel. Cheers, mate. Appreciate it. Listen, yeah, look, markets are down. I mean, I'm down big on Tesla right now. Like, I don't look at the number too much, but I know that I'm down big time. This is what the markets are all about. Hold long term, you'll be absolutely fine at the end of the day. It's the biggest struggle in all of this is controlling like the monkey on your back when markets fall like they have done now. It's very, very easy to panic because at the end of the day, people are putting their savings into the stock market. And if, your money is going down, it's not a nice feeling to see it in a minus, in red. It's human nature. We're hardwired to essentially want to run for the hills and take our money out straight away. But it's managing that psychological side. That's the biggest challenge of all of this, particularly if you're doing this yourself. But holding long term, you'll be absolutely fine because it will come back. And I'm looking forward to seeing my Tesla holdings go back up as well at some point. Just looking for the next one, guys. Right, let's have a look at this. This is an ISA. Hi, mate. Used ISA allowance up this year. Should I invest in same funds as my ISA account in a GIA? Elliot. I just emailed you back, mate. Let me answer it here anyway. Yeah, so there's nothing wrong with you if you've already used up all of your ISA allowance, and well done, by the way, because, yeah, we had coaching and we were talking about that. So well done that you've actually done that. If you've already used up all of your ISA allowance and you want to go into a GIA, as long as you're happy with the selection of the funds that you're invested in that tax efficient wrapper, there is nothing wrong with you using the same fund for your GIA as well. I think maybe some considerations in there is, if you have a particular goal or a particular objective for the money that's in your ISA, if that's different to the money that might be going into your general investment account, then you might choose to use a different fund. But if you haven't really got two distinct objectives, then there's nothing wrong with using the same one. But yeah, thanks for the question, Elliot, and thanks for emailing that over as well. Greg saying here that The Big Short is an amazing film. It is one of my my top 10 films. That and another film called, if I can remember, it's got Jeremy Irons. I'll remember it a bit later on. It was also about the stock market crash in 2007, 2008. Very, very good film. Really, really good film. So yeah, let's have a look at this. Things go tits up. How long do you imagine it will take to get back to where it drops from? Uh, Good question. The answer to that is I don't know. If you look at the last big market correction, 2007, 2008, it took about 5 years for that to recover. So will it take the same length of time? I don't know. Um, it's hard to say, and I know that that doesn't really help if you're investing, but it's an impossible question to answer. I would generally say to people that, if you are investing, we say this all the time. This is why we talk about diversification and risk management and investment timelines, right? Making sure you've got things like an emergency fund to make sure that you don't need your money if the markets were to crash. Is make sure that you're happy with this money potentially being in there for the long term and actually suffering a crash that will take 5-6 years to recover, because sometimes that's how long it does take. We may see it recover a little bit quicker, but there is just no way of knowing. Sometimes I really do wish that I had the sports almanac from Back to the Future, because life would be just so much easier, and I'd be a quadrillionaire, and be able to give you guys all of the investment tips that you're looking for in full knowledge of what will happen. But unfortunately, this is not a movie script. Let's have a look at this one. Okay, there is no link to the live stream website. Here we go. All right, okay, right, Ming, right, 1 second. I know that you did ask me this in a comment, and I know that you did want to come on. So let me just post this in here. All right, so there's the link right there, Ming. So if you click on that, you should be able to join me on here. And margin call, that's the one. Marta, yeah, there we go. Absolutely, you read my mind right there. That is it's a brilliant film. Margin Call and The Big Short. If you haven't watched those two films, go watch them. They are absolutely amazing. If anybody else does want to join as well, just to ask a question, then feel free to use that link that I've just posted there as well. Well, let me just find where I was. Right, this is one from Money, Whiskey and Coffee. If you have £100 to invest per month, would you invest in one stock at a time per month, or would you spread that in multiple stocks, buying fractional shares? I lean towards the latter. I would do the latter. I think ultimately, if I was just starting off and I was going to go down the route of individual shares specifically, and this doesn't mean you should go and do that, I'm just telling you my approach. I would research maybe 10 companies and have a basket of 10 companies and invest into those 10 companies on a monthly basis with my 100 quid. So if you're using the likes of maybe Trading 212, for example, this is where things like the pies come in very, very handy, because you can have your 10 companies within the pie, and then you can move with the sliders how much of the £100 a month you want to be invested in each of the companies. So you might say you want to have £25 in one of them, then the rest of it divvied up equally or sporadically. But that's the approach that I would take. I would research maybe 10 companies, maybe 15 companies, spread the money across, in opposed to putting it all into one company. The reason for that is because you carry too much concentration risk. All of your money going into one company is very, very high risk. If you put in your money into 10 companies, 15 companies, it doesn't matter if one of them crashes, 10% or 5% in one day. You're providing yourself a little bit of a cushion, some protection for your money and for your investment. So I would do the latter. Great mind think alike, mate. Here's one from Kevin. Kevin, how you doing? Please, could you be like an active manager, or am I misunderstanding what you're doing in Canary Wharf? I wasn't an active manager in Canary Wharf. I worked for an investment house, mate. So I worked on the management team. Essentially, we were selling our products into big financial advisory networks, and with the financial advisor networks, essentially. So that's what I was doing there. I wasn't an active manager. So this is a follow up from Delight. Is XRP Coinbase good to invest in? So I guess you're saying, is it good to invest in XRP via Coinbase? Um, Two questions there. Is Coinbase a good platform to use? Yes, I haven't had any problems with them. They've got the normal Coinbase and you've got Coinbase Pro. The fees on Coinbase Pro are, I think, a little bit less and you've got more functionality, but you kind of need to know what you're doing. If you're just using the normal Coinbase, though, it's really, really easy to buy and sell, to be honest. Is XRP a good investment? Is a completely different question. That depends on whether you think it's good or not. I hold a little bit of XRP. I don't particularly think that the XRP coin itself will do what they think it's going to do, but I could be wrong. I think that the banks would likely build their own coin and opposed to adopt the Ripple coin or XRP personally, but that's just me. I could be wrong. So is it a good investment? I don't know. It really depends on what you consider a good investment, essentially. So, yeah. All right, let's have a look. We've got Andy on here. Andy, how you doing, mate?
Hello.
Hey, how you doing? You okay?
Yeah, good. Thank you. It's good to be here again.
All right, no worries, mate. How's your week been?
Not too bad. Just waiting for your live Q&A, really.
Yeah, cool.
Do,
So
do you do you normally start at a particular time or it's just random?
if I do it on a Sunday, it's always at 9:30.
All right,
If
cheers.
I do it
Thank
on a
you.
Sunday, if I do it during the week, I'm trying to suss out what days I can do during the week because weekends tend to be a little bit freer for people. And opposed, they haven't got to wake up for on a Sunday you do, but midweek it's a bit of a challenge essentially. So yeah,
Right, okay, great.
cool.
Yeah, I recently just watched your previous videos in your YouTube channel,
Hmm.
and I came across the dividend stock today.
Hmm.
Can I just ask, you talk about reinvesting the dividend back into the stock itself.
Hmm.
Is there any platform that allows you to do this automatically, or you have to like manually put it in every time you receive the dividend?
It depends on how you're invested. So okay, so let's approach this with the two practical ways. So if you've bought individual stocks, for example, so let's just say you're using Trading 212 and you bought a stock that pays a dividend, then it will pay that dividend into your account. You then have to reinvest that amount manually. If you bought, say, like an index fund or something like that, that has dividends paid into it or has dividend stocks within it, um, you have two choices when you pick your fund. There is either an accumulation fund, which means that if it does pay dividends, it's reinvested automatically, or you have a distribution, which means that when it pays the dividends, it will pay it out to you. If you pick the latter, which is a distribution one, you would have to manually then reinvest it yourself, if that makes any sense. So
Oh,
it
right.
depends on how you started. If you're using free trade, trading 212, they'll pay it to your account. You would need to reinvest it. If it's via funds, then I say to most people, if you don't need the income, you don't need the dividend to add an income, you might as well just choose an accumulation fund that will automatically just reinvest it for you because then you get the hyper compounding effect with it as well.
Right, I see. Okay, thank you. I'm using eToro at the moment, actually.
Okay, so eToro, are you buying individual stocks in there or ETFs?
I got some individual stock and two of the ETFs as well, but
Okay,
none of them are paying dividend at the moment because I don't want to get into it without knowing what they are really. So yeah, I'm just reading up what's dividend stocks and stuff like that before I really try to get into it.
okay, yeah, I don't remember. I don't think eToro has a specific breakdown for dividend stocks specifically. I don't think they do. So, I mean,
Yeah, but then when I just do a wow search for like the keyword dividend,
mhm,
I see a few over there, like the Vanguard dividend appreciation,
mhm.
DGRO, HDV,
Okay, so
DVY. Yeah,
yeah, those will be funds though. So those
right.
will be funds. So if it's a fund, it will be a case of. Let me just have a look. Actually, dividend. If it's a fund, then it should have. It should be in accumulation, unless it's going to be in distribution. Um, Yeah, US dividend equity ETF. This one I believe will accumulate. So it's just make sure you read the details of the ETF so you know whether it's a
Okay.
distribution or an accumulation ETF. Because if it's an accumulation, any dividends that's paid out, it will be kept within the fund. If it's a distribution, it's going to pay it out. I think this one will be an accumulation one though.
Right. Okay. Thank you. Yeah, I'll look into it more before I actually invest in it.
Yeah. So, I mean, if you buy a fund, you should be okay because, most of the funds, if they are dividend specific funds or ETFs, they are going to do all the research on the companies for you on your behalf. So you don't
Right.
have to do much of it yourself as long as you know and understand what the aim and the objective of that ETF is.
Yeah, I believe those I've got in the Vanguard account, they are all accumulation, like the
Yeah.
emerging market stock index one,
Yeah. Yeah.
FTSE
Most of them will
100
be.
and the US equity, they are all accumulation.
Yeah. Most of them will be, although there are some distribution ones in the list with Vanguard, but most of them are accumulation.
Right. Okay. Thanks, Pete.
Cool. No worries, man. Cheers. I know that someone else came in as well. So if you want to pop back in, let's just see where we were on the chat. All right, guys. Request. There's 136 of you at the minute. We've got 33 likes. Really, really important just in terms of the video and YouTube ranking. I mean, YouTube and the algorithm can be really, really difficult sometimes. So let's see if we can get those likes up to about 50 or so. Appreciate it. Right, where were we? Right, here's a good question. If you're invested in individual stocks for the first time, is it wise to first invest in a foundation pie, trading 212 using Coca-Cola, Disney, etc.? Yes, it can be. If you're investing in individual stocks for the very first time, I would strongly, strongly, strongly encourage you to make sure that you actually understand the basics and the fundamentals around some of these companies and actually risk management, diversification, all that kind of stuff. And I cannot overstate this. You really need to understand risk management, diversification, how portfolios are built. If you don't know how to do those things, you're going to go and build a pie in trading 212 with no direction, no kind of sense of what you're doing. So there's lots of videos on the channel that I've done that talk a little bit about, risk management, diversification and stuff. So you can go and watch those for free. Alternatively, my course is there, which is $59.99. I have a section that actually goes through risk management. It goes through diversification. It goes through asset allocation, asset classes, all those things. If you know and understand those things, when you get into trading 212 and you're looking at all these companies, you're kind of a very, very good understanding of, right, Coca-Cola, big company, Disney, big company, Apple, big company. Those will be your foundation. Then on top of that, you can start to build speculative stocks if you want to do that. But it's really, really important that you understand and you've got those foundations in place, because otherwise you're just going to be doing stuff without really knowing what's going on. So yeah, just be mindful. Let's have a go at this one. Okay. Thanks for all the hard work. Thank you. As a new investor, you really helped me at the beginning understanding the markets with a level ahead and having some appreciation and our wits about us. Thank you, mate. I really, really do appreciate that. That's the whole point of the channel, really, to be honest, to kind of help people make the best investment decisions possible without too much of this hype and this noise in the background consistently and constantly influencing the way we think and what we do. It's very, very easy to be influenced when, people are talking about, I'm making so much money here, so much money there. Actually, it takes a lot of strength to kind of stay true to yourself and say, actually, you know what? I'm going to make sure I've got the foundations in place. One thing that people don't often appreciate enough is the fact that the stock market is always going to be there. If a company is a good company, is always going to be there. Yes, you might miss out on 2-3%, 5% worth of growth, but actually, if it's a solid investment, where the stock is right now is just the beginning. It will always grow. So I know that it's flippant to say this, but you have to bear in mind that with that being the case, you don't have to be invested immediately. You have enough time to do due diligence. You have enough time to take your time. You have enough time to make sure that you're comfortable with your decision before you jump in, and not just jump in blindly thinking, oh my God, everybody else is in it, so I have to be in it as well. It takes strength to do that. So please do bear that in mind. This is a good one about free trade. MC. I have a free trade account. Are the online accounts safe to invest the full ISA limit into? Um, yeah, I mean, if you're looking at safety, free trade are a big provider now. You've got cover under the financial services compensation scheme with them up to £85,000. So if you invest in £20,000 and they were to go bust for whatever reason, you'll get cover. So they're as safe as can be when it comes to that specifically. You haven't got to worry about them going bust and you not being able to recover your money. You'll have that as standard under the financial services compensation scheme. So yeah. All right, there's a two-part question here. Bear me 1 second. Right, this is the first part. This is the first part to the question. So, if you invest less than 20,000 per year, is it worth it to have an ISA? Thinking that gain up to 12 and a half are tax free anyway. I'm saying this because some platforms charge for ISAs. Then the follow up to this was, if your gain is less than 12,300, do you have to let HMRC know, or will they find out themselves because of your national insurance number? Okay, look, let's just go back to the first one first and foremost, right? I cannot stress this enough, guys. If you're first, and I don't know, many people are watching YouTubers say you need to be, your starting point has to be cost. No, it isn't. You should not be looking at investments or investing in the market with cost being the first port of call. That's not the objective here. The objective number one is for you to invest in the safest, most efficient way possible. That's the first port of call and first thing you need to consider and make sure you tick off. Cost comes down the line. An important consideration, but it's not the most important consideration. Now, in relation to this question, £20,000 per year is your ISA allowance. Because you have a capital gains allowance of 12,300 does not mean that you should not invest into an ISA. The whole point of you investing into an ISA is the fact that it's free from income tax and it is free from capital gains tax. So if you invest £10,000, for example, for as long as you have it in there, it is going to be free from tax. If you invest it into a general investment account, yes, you've got 12,300 capital gains allowance, but it's still taxable for income. So the first rule of financial planning, tax efficiency. Don't care where you're starting, where you're investing, how much you have to invest. You put your money into an ISA first. Even if you don't manage to fill it up, using your ISA doesn't use your capital gains allowance. So let's just say hypothetically, you're able to put 20 grand in say 15 grand in the first year. You manage to win the lottery. Okay, well, all of a sudden now you've got a lot more money that you can invest into general investment account. You're going to need your £12,300 capital gains allowance in that instance, and that you'll be very, very thankful for that, even depending on how much you actually win. But tax efficiency is absolutely key. That's the first thing you need to think about. In terms of the charge for the ISAs, look, you cannot expect investment platforms or investment providers not to charge money. Nobody here watching this works for free. So why should they work for free to manage your money? And, this is a very expensive business. The registration, the authorization, all of that kind of stuff, it costs hundreds of thousands of pounds just to get a license to operate. So they have to be able to be profitable in their own right in order to provide you the services that you have and the protections that you have. I mean, we talk about the financial services compensation scheme being £85,000. They pay a premium for you to have that benefit. So that money has to come from somewhere. So you're not going to get it. You shouldn't be put off by the fact that somebody's charging you, say, for example, free trade, £3 a month for an ISA account, and let that deter you from investing into an ISA. It's like, cutting off your nose to spite your face. That's kind of what it's like. Yes, there are other providers out there that may not charge you a £3 a month fee, but they're going to charge you in other ways. So there is always a charge for a service. Don't let cost be the first thing. Then the second part of the question here which was this, right? So, when you open an account, an investment account, they ask for your national insurance number. That's how they track whether you use your ISA or not. So there isn't really any way of getting around not telling, or HMRC not knowing what you've done, really. If they want to go look for it, they can find the information, because you have to give them your national insurance number. In terms of, do you have to do a tax return? I think the official line from HMRC is that yes, you do. You do need to do a self-assessment, and be upfront around what you've actually got invested, what you've actually gained in terms of capital gains. The best way of keeping track of what you've had in terms of your capital gains is to make sure that you are taking note of, if you dispose of anything. So if you buy an investment, you sell it for a profit, you note that down so that you know exactly where you are in relation to your 12,300 capital gains allowance. That's a very long answer to a two-part question, but really important points I think are crucial for people to bear in mind when we talk about this. If that isn't clear enough, mate, just let me know, and we can revisit. Let's get on. Let's have a look at this. What do you think? What do you think? We will have a housing market correction crash after furlough is withdrawn in September. Possibly. I don't. You know what? I don't actually know. Because I think at the end of the day, there's always going to be a need for housing at the end of the day, right? So it's simple supply versus demand. It might drop within a short period of time, but even with furlough being withdrawn, I mean, most people who will be buying a house will still be on track with things like deposits and so on and so forth. If they've lost their job, then clearly they're unlikely to be in a position where they are going to be in a position to kind of like press the button on a house purchase. But who knows? I really don't know. Possibly, but I still think that the supply versus demand dynamic will mean that property prices should be pretty healthy still. Um, yeah, it's a tough one. I know people who have bought houses in furlough. When one of my neighbors, he bought a house whilst he was on furlough, and the mortgage companies were more than happy to work with him on that. And I think a lot of the banks and the lenders have eventualities in place, and systems in place to support people who have been on furlough. So I don't. It's a hard call. Maybe not. I don't think it will personally though. It might take a little bit of a dip. Will it crash? I don't think so. Well, let's have a look. Having an so okay, this is an interesting comment. So having an ISA in the UK is only a real benefit for higher rate taxpayers, but you are reserving the spot each year in an ISA. So when you do pay higher rate, you will benefit. I don't know if I'd agree with that entirely. I think whether you're 20% or 40%, it's an allowance that you have, and if you don't use it, you're going to lose it essentially. And whether you're 20% taxpayer or 40% taxpayer, it's all about the habit of actually investing into an ISA. Okay, I know people who are higher rate taxpayers who can't still fill up their ISA allowance on a yearly basis. The point is with an ISA is that if you're able to pay in whatever you can, 5 grand, 10 grand every single year, you do that for 10 years, you get 100 grand in there, 50 grand in there, 200 grand if you do the maximum over that period of time. It is completely free from income tax and completely free from capital gains tax. It gives you options later on, and those options are not dependent on whether you're a 40% taxpayer or a 20% taxpayer. It's completely irrelevant. It's an option for you to exercise because you have utilized your ISA allowance to whatever degree during that period of time. So I'm not sure that I agree there. I mean, certainly if you're a high rate taxpayer, yes, you're saving more money, but that's relative. If you're 20% basic rate taxpayer, you're still saving on tax. It just means that if you're a high rate taxpayer, potentially you're saving more. But if you can save 20%, it's not like you would ever say, oh, if I can't save 40%, I'm not going to do it. Of course you would, even if you are paying 20%. So Hi, newbie investor here. The financial media seems scared to death about inflation. How bad do you think it will get? Really good question, Paul. Look, it depends on what the inflation numbers. So the last set of inflation numbers out of the states were 4.2%. Okay, so most governments, the UK government and US government, they try to keep inflation at 2%. That is the target. So if you look at 4.2, that's double. And there was a big panic in the States as a result of that. But I think sometimes you do have to kind of take a step back. And I speak about this in the video next week. You have to take a step back. What has happened over the last 12 months? We've been locked down, and we've had during that period of time pretty poor inflation numbers, actually, because, well, we were in a lockdown situation. So I think the media are very, one of the reasons why the media is, I would say, in your words, scared, is that the Fed in America have not been clear on their stance. One minute they were saying, "Oh, we're not going to do anything," then the next minute they're saying, "Well, we might have to make pull some monetary levers here. We might have to do something to ensure that it doesn't get out of control." And people are now throwing around the phrase hyperinflation, which is, inflation at such a pace that it runs out of control, and then everything costs more money around us. So how bad it will get will be dependent on the levers that the Fed and governments around the world decide to pull if inflation becomes a problem domestically. So in the States, we know that it is. Here in the UK, I can't remember what the last inflation numbers were for us. But if we have the same issue, then damn right they're going to be looking at, right, what do we need to do? One of the levers they can pull is inflation, is interest rates. But with this being said, inflation isn't always a bad thing. Inflation can actually be a very good thing for the economy. Now, you just need to have a look at examples of people wanting to buy houses. Right? If interest rates are so low, it means that your mortgage rate is going to be low. If interest rates are low, it means that credit card rates are going to be lower. Personal finance, personal loan rates are going to be lower. Car finance rates are going to be lower. If you're looking to buy a house, make a big purchase, buy a car, and you know that the interest rates are lower today than what they will be next month if the interest rates go up, and you know that the interest rates are going to go up, you're likely going to go out and buy that house and buy that car today or in the next few weeks, because you know interest rates are going to go up. So whilst interest rates might go up, they can be used to stimulate the economy and actually improve business, improve trade, so on and so forth. It's when it runs out of control that it's going to be an issue. If interest rates start to move as a result of that, then we might get into a situation where actually the government will start looking at the stock market being affected, because at the end of the day, if interest rates go up and as a saver you haven't been able to get a decent rate of savings in your bank account or on a notice account for the past 15 odd years, and all of a sudden interest rates go up 2% over a very short period of time or an extended period of time, the stock market becomes less attractive because you don't need to take that risk to be able to grow your money in that way. So that's where you see the markets kind of like be a bit volatile, and the fact that people will start pulling money out, and if inflation goes up, they're going to need more cash. So there's a number of things that kind of fit into this big ball of complexity around interest rates. But what's going to happen, we don't know. I don't think that there will be any really sharp, heavy, sharp interest rate increases without due warning. Normally, monetary policy and banks will signpost this. They may say that we envisage interest rates going up 3 times over the next 12 months. That's signposting. So right, we need to be prepared for this. And typically, they will only make very small incremental increases to the interest rates if they need to. It won't be a big 1% jump. I can't remember the last time they did that. I don't think they've ever done that. But it's certainly a very, very interesting place at the moment with where we are in terms of inflation. And again, I refer back to what I said at the beginning of this stream. It's all about now making sure that if you are invested, you are 100% comfortable with the way you are invested, whether that be in funds and ETFs. If you're picking individual stocks, make sure that you're really comfortable with the companies that you've bought, and make sure that you're comfortable with the research that you've done. Because if things do get continually choppy and volatile, you're going to be questioning your investment philosophy. So it's really important that you understand that. Are you actively invested? Are you passively invested? If markets start to trail off, if you're passively invested, well, guess what? Your funds are going to start trailing off with the markets, because at the end of the day, it's passive. It's going to track it. Whereas if you're actively invested, you've got a team of professionals that are looking at the markets, making calls for you. I mentioned this the other week, and people were saying, well, 4% is nothing to write home about. But Moneybox actually, they rebalanced my portfolio. I think it's about 3.5, almost 4 weeks ago. That portfolio is now up 4%. Now, people talk about, 4% isn't that great. Okay, well, how much is the market down right now? How much is Tesla down right now? Tesla's down, what, 20 odd percent? The S&P 500 down 30%. Okay, I'm up 4% in a managed fund right now. That's the merit of having an actively managed fund. So again, being comfortable with your investment approach. If you're first time investing, this kind of stuff freaks you out, then to a certain extent, you've got no business being in something that's passive. The pros and the cons of passive is, number one, it's cheap. Fantastic. That's great. But I said this before, you should never start investing with the point of view of cost being your main driver, your main selection driver. Never. It's all about picking something that is comfortable, that is efficient, that is going to do the job for you, that you are comfortable with. That's the most important thing. I have a mixture of things, passive and active investments. I don't mind that I pay a little bit extra to Money Farm, for example, to manage my investments, knowing that they rebalance my portfolio. That's how they're earning their money. If I had that in passive at the moment, I'll be thinking, like, maybe I need to do something about it. I need to tweak it, but I would know what to do. If you wouldn't know what to do, the question would be, is a passive approach right for you? If you go to an active solution, yes, you've got to pay a little bit extra, but you are employing the skills of professionals to help you make the calls that you cannot make. So cost is only an issue in the absence of value. You have to question what value they're delivering for the service that they're providing. And that's one of the most important things to consider. It's not just about cost. Cost is an important point, but it's not the main point to consider. I'm just looking at for some more questions, guys. I'm just looking at the time as well. How long are we? We're 49 minutes into this now. Let's give this maybe another 10 or so. I think we've got Peter here as well. Hang on, let's bring Pete in. Hey Pete, how you doing? Well, hang on, let's bring Pete in. Okay, I think we've got a feedback loop there. That's weird. Let's have a look. There's a lot of comments about margin call. It seems to have divided. Attentions here. Actually, to be fair, margin call. Some people are saying it's a really good film. Some people don't actually like it at all. I find it really fascinating, actually. And this, again, one of those things where taste and personal taste always comes into this kind of stuff. So on this one, this is Restream, Amir. Not StreamYard. I had a look at StreamYard. I might be going on to StreamYard actually after this has run out. But I bought this one and upgraded the package just to test it out and stuff. So I know StreamYard is a really good option, but this is on Restream right now. Somebody's saying, Tom Atz is saying he started with free trade last week. That's good. Martin, let's have a look at this one. If I buy into an investment trust on 212 and it says there are performance fees and management fees, how do you pay? An annual bill off trading 212. I have an ISA with Hargreaves Lansdown and I pay monthly. Okay, so they should specify how you pay. Typically, it's an annual fee taken monthly. Typically, without knowing exactly which one you're in at the moment on trading 212, it's hard for me to say, but typically they will take it from your investment either as an annual fee monthly or at the end of the year. But if you have the fund fact sheet or any documentation, they should explain it in there, Martin. What do you think about internet computer price? I don't know what you mean with that one, mate. Elaborate for me, please. Good conversation about Coca-Cola in here. Okay, let's have a look at this. I'm investing in a lifetime ISA, worth it for buying first home, despite not being able to rent it out, no flexibility. Okay, yeah. So the lifetime ISA is meant for residential property only, not for buy to lets. If you're looking to buy a property for a buy to let, you can't use it. There is a reason why the government does it. The government wants those kind of incentives to be done for people who are going to be living in the property. If you're using that as an investment, then you're not really, you don't really fit that criteria. So you're right. It is literally for buying your first home, not for buy to let, not for renting out. That will be me. That will If you're buying something to rent it out, that's an investment. It's not an asset that you're holding that you're going to use for personal use. You're not a first time buyer in that example. So yeah, unfortunately, you can't use a lifetime ISA for that. This is a good one, mate. Yeah, look, this crypto is it's been very, very interesting because 2 weeks ago it was all about Doge. It was all about all of these altcoins, or as you've put it there, all of these coins that could just blow up overnight and make tons and tons of millionaires. Now it's turned on its head and people have lost money again, are holding losses. There isn't a peep now about the hype behind it. And I think this is where we need to be very, 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 very careful in the fact that, you should never buy anything simply based on hype and news. You have to know what you're doing. I mean, Dogecoin was started as a joke in the first place. And yes, Elon's very, very passionate about it. But in my opinion, that guy wields way too much power when it comes to his Twitter account and the influence that he can wield over things like cryptos. The simple fact of the matter is this: that if he was commenting on a stock, so let's just say he was commenting on AMC, or a small company like that, the SEC would be all over him. But because obviously it's crypto, it's not regulated. There are no repercussions, even though you can very much level the argument that is market manipulation, tweeting and getting people riled up, so on and so forth. So yeah, crypto at this point is a very, very funny thing. Question here: did you go to uni? If so, what did you study? If not, what was your alternative? Okay, so I didn't go to university. I could not afford to go to university, unfortunately. When I came back to the UK at 17, I had literally 50 quid in my pocket. I did my secondary school education in Nigeria. I did physics, chemistry, biology. I was supposed to be a neurosurgeon, actually. That was the path I went down. I quickly found out that actually I couldn't afford the university fees or even the college fees to do the pre-work to get into university. So I had 50 quid. That was it, pretty much. So I pretty much went into work. I did my qualifications to be a financial advisor and mortgage advisor whilst I was in the workplace, essentially. So do I wish that I went to uni? Yes, I do wish that I had gone to uni and I could have afforded to have gone to uni. I think it would have made my uh, journey into Canary Wharf a lot quicker and a lot easier, because it was a challenge. It really, really was. And I was very, very lucky in the end. So I didn't go to university. I wish that I had, though, even though it is very expensive and many people deem it as a waste of money. It definitely would have made my dad proud, though, because that's one thing that he did want to see me do. But I think if I went to university, I wouldn't be in financial services. I wouldn't be here. I'd be a surgeon. Okay, Ming. I'm looking at eToro on app and also the website. Where can I see the information of the funds accumulation, please? So, if you go, bear me 1 second. I'll need to find it, and I'll hopefully try and answer this for you now. Right, let's go to trade markets. ETFs. See, I don't hold any ETFs within eToro, but they should provide you with. Right, let me just share my screen with you because it's going to be really difficult to explain as I'm doing this here. So, bear with me just 1 second. All right, hopefully you guys can see this. Let me just try and position this a bit better so you guys can see it a bit clearer. Let me just move this off as well. Right, okay, so typically, so what I would do with this one is once you've selected the one that you want, and by the way, you just go markets, ETF, you should have this. What I would do is I would see if I could actually copy this or just this ticker right here. And I would probably go to somewhere like TrustNet or Morningstar could be a really, really good option that you could go to as well. And then, what was it called? The AAJX ETF. All right, I need that full. Because what you would normally do is you would copy this. You would copy this entire thing. You put that in Google. That should then bring up a website that will have all of the fund information for you. I'm able to do this in other things. I just can't copy this on eToro for some reason. But I'm surprised that they don't actually show you all of the fund information because they should. There should be somewhere where it's unless I'm missing something. Let me just have a look through this quickly. Yeah, this is just and that's going to take you to. Oh, hang on a second. Right, let's just do this. So I copy that, put that into Google. Okay, so there we go. So what I'm trying to say here is, if you get the title, the name of it, and you put it into Google like this will take you to iShares, or you could just go to iShares right here. And when you go into iShares, you want to click on that. And once this loads, this gives you all of the overviews that you essentially need. Okay, so it gives you the basic information there. The investment objective is here. It will give you performance. It will give you the key facts. It will give you all the characteristics. It will give you fees. It will give you the portfolio makeup as well. So if you can't find it within eToro, literally just copy the title of it, which is that right there, and then copy that into Google. And you should have a website that will come up specifically that will give you all the information that you need. I'm surprised they don't actually have it inside eToro, if I'm completely honest, because they should do. Make it a little bit easier for you. So I hope that helps, mate. All right. Okay. So we're at the hour mark right now, guys. So if you haven't smashed the like button already, make sure that you do. There's still 157 of you on here. Let's see how many questions we actually have left on here. There's quite a few. Let me see if I can get through a few more. I think there's more of a conversation more than anything else in here, which is nice to see. So let me see if I can spot a couple more questions, and then we'll call it a night. Okay, there's a follow-up from MC here. So if I have 10K in a GIA and make 500, do I pay tax on that, or just anything over 12,300? So yeah, in that example, your capital gain on that investment is 500 quid. That is below your capital gains allowance. So you wouldn't pay any tax on it because it's below the capital gains allowance. there's a conversation around here on the housing market around the withdrawal of the stamp duty holiday. I mean, that may slow people down, but at the end of the day, if you want to buy a house, it should be factored into the cost of that house anyway. If you're able to still latch on to the fact that you can benefit from the stamp duty, that's a bonus. I don't think it will deter that many people on, because the necessity is you're acquiring an asset, and those fees or those costs are part and parcel of that process. It's saying here, though, Jason, that there's been a shift in the regional house changes, house price changes. Yeah, I think that will be depending on where you essentially are. I mean, where I am, the house prices have gone up more than anything else. They haven't really moved down in the last kind of year. I mean, that property prices are absolutely ridiculous right now in Shropshire. It's just it's crazy to think about. All right, this is a good one. This is a really good question. This is mortgage related. I'm getting closer to having enough money for a house deposit, but I've only been in a new job for only a few months. What is the likelihood of getting a mortgage? Okay, so some mortgage companies will want to see a contract. Some won't. So what I would say to you is your mortgage broker is going to be very, very important to what happens. So ideally, you want to go see an independent mortgage broker. So in other words, you don't want to go to like Barclays or Santander directly. No, you want to find a mortgage broker, and they may charge you a fee, but trust me, you want an independent mortgage broker. If they don't charge you a fee, even better, but be prepared to pay maybe an upfront fee, which will be offset a bit later on. And an independent mortgage broker will go to pretty much all of the mortgage lenders out on the market, and they will try and match someone to your criteria specifically. So the fact that you've only just started a new job, and then they will come back with a list of, right, we have this option, that option. Some people will request that you need to have a contract or something like that, or when your probation comes to an end, or maybe a note or something like that from your employer. It varies. But I wouldn't let that completely put you off. Try and go and see a mortgage broker. Just have a conversation with one, and just kind of get a sense of where the land lies. But yeah, it shouldn't be too much of an issue. Nice discussion about going on with the mortgages and house prices there. Really like it, guys. All right, so Mass, have you got the link? If you're still on here, if you got the link, we can take you on really, really quickly. So by all means, jump on if you can. If you've got the link, if you haven't, just let me know. This is a good one. Yeah, you know what? I'll see what I can do, MC. I'll need a good accountant for that, to be honest. I'll go into my contacts and see who I can actually pull on that. So, yeah. Right, Mass, I have got you 1 second, mate. I'm just going to... Oh, God. All right, okay. There's quite a few other messages on here. We're not going to be able to get through all of them, guys. So I'm just going to literally have a chat with Mass now, and then we'll call it an evening. How you doing, mate?
I'm all right, fine, thank you. Can you hear me by any chance?
I can hear you clearly, bud.
I just like to say, well, thank you very much for your channel, because it's helped me a lot.
Oh, no, you're welcome, mate. That's the whole plan, to help people, so...
This is going to be a bit of a bizarre question, because I was one of the few people to invest in GameStop.
Okay, yeah.
When in Parabolic.
Mm-hmm.
And you won't believe it, I did make like a couple of millions from it.
Right, okay, good.
But I was wondering, like, where do I put the money? For an example, I know the crypto is going to go back up again.
Mm-hmm.
But obviously it's too risky on risk management to put all your money back into it.
Mm-hmm.
Because as you know, Bitcoin's very volatile. It goes up and down.
Mm-hmm.
And so with Ethereum and etc. Because it's all like a chain link. So if one drops, they're all going to drop at once.
Mm-hmm.
I put in the house market. I believe the house market is bigger than a bubble because people just buying like crazy.
Mm-hmm.
I just don't know where would you invest? Where would you actually let's just say you had $1 million. Where would you actually go out and invest it?
It really depends. I mean, so for you, like your capital gains tax bill. I mean, first and foremost, you need to account for that. Everything else beyond that, I mean, for you, with the amount of money that you have, it's not just about where you put the money. It's also about issues that you're also going to face. Inheritance tax issues. You're going to have income tax issues potentially as well. Some people will prefer to put money into property with that kind of money because they feel as though it's, I don't want to use the word a safer place than stocks or crypto, but psychologically you're exchanging that money for a physical like property that you can see, a physical asset that you can feel, touch, and can generate an income for you. Some people will do a mixture of the two, so invest in property but also invest in some things that will help reduce the tax liability that they have. So for many people, when I was advising you have a look at footballers, for example, there are certain investments that they can do that will give them a 30% check back from HMRC on the money that they invest to reduce their tax bill. So for you, you're in a very unique situation if you've made that much gain from GameStop. And so, and for you, it will be really important that you sit down with someone to actually do a map of a plan around how you allocate your money, considering you're going to have tax liabilities, you're going to have inheritance tax issues, and potentially you're going to smash your capital gains allowance, mate, like completely. You're going to pretty much breach most of your tax allowances. So you need to have a proper plan in place to ensure that whenever you invest it, you're investing in the most tax efficient way possible, bearing in mind you've got an entire circumstance that I know nothing about at the moment. I don't know whether you're married or you got kids or anything like that, what assets you already have.
Thank you.
Right. Right. So there's a lot of stuff that you need to bear in mind and be mindful of, because you're in a unique situation where you've got quite a lot of money that you've made. The tax man's going to come knocking. You're going to blow past all of your allowances. I mean, ISA allowance for you is nothing. Basically, capital gains allowance for you is absolutely nothing. So how can you invest that money in the most tax efficient way? If you're going to buy property, are you going to buy it in your name? You're going to put it into a company so that you can manage how you extract the income. There's lots of moving parts for you, mate. So I would say you really need to sit down with someone and actually get some advice.
Even if I brought a property, wouldn't it just be a liability?
It depends whether you decide.
I've got to pay because we both live in because of the UK. You've got to pay tax. I mean, council tax. Mm-hmm. So regardless, the property, I have to maintain it. Mm-hmm. So it wouldn't just be a liability. I'm constantly going to be put money into something. And the only way I realize getting that money back from me if I put it on rent. But even if I do even end up buying an expensive property, I've got to find someone who'd be willing to pay the rent for it.
Yeah. I mean, that wouldn't be an issue, mate. It depends where you buy and how you market it. I think, look, you're never going to be able to put money into something that isn't going to cost money. So council tax, those are just running fees, right?
Yeah.
Running electric, gas, maintenance, council tax, those are just running fees. The big question for you is, do you go and put cash into those buildings, buy it outright, or do you actually mortgage it, borrow money at cheap rates and invest the money to get a better return, potentially on the stock market or via other avenues? There are so many moving parts for you and your situation, mate. You have to kind of know what best works for you. So if I was advising as an advisor still, I'd be looking at, right, what are your, where do you want to be in 5 to 10 years time? What does that money actually mean to do? What does it actually need to do for you? And then we have a look at all of the options that you have, and they're numerous. And then we narrow down the one that best suits your circumstances personally, because there's more than one way to skin a cat. And you have the luxury of having an asset, cash, which gives you the full access to all of the options available out on the market.
Okay. Yeah. Fantastic. Thank you very much. I can appreciate it more.
No worries, mate. But if you want to chat, you can drop me an email and stuff like that. But yeah, just be mindful. Like there are so many options that you can take, mate, and many will be envious to be in your situation.
It was, to be honest, it was by luck, because I was going to invest into GameStop just as like when a pandemic finishes, the chances are it's going to go up. So obviously the game industry is massive. Mm-hmm. I just never knew, obviously, this was going to be the outcome.
Mm-hmm. Yeah.
So it was just something by luck, to be honest. It was just right time, right place.
Yeah. Which makes it even more important that you do the right thing with the cash as well, because now the cash that you've made could potentially set you up for the rest of your life. So how do you deploy it to ensure that you get the environment and the mechanisms right so that it actually supports you for the rest of your life without you having to stress from a financial point of view, manage the tax situation as well, because there will be tax that you need to manage as well. And, using things like, VCTs, EISs, they may come in handy. It's just how you do it over a period of time, manage it so that you get the maximum tax benefit possible.
Okay, great. Yeah. Well,
cool, man.
Thank you very much. Much appreciated, buddy.
No worries. Cheers, Mas. Thanks, mate.
You too. Take care, buddy.
Cheers.
Bye.
All right, guys. That's it. An hour, 11 minutes. I will do another one of these again. Not quite sure yet. I know a lot of you will pay attention to the notifications that you get when I upload these things as a potential show. So apologies I couldn't get through all of the questions this evening. There's quite a few in here. There is quite a lot of discussion going on as well, which I like to see. But yeah, really do appreciate you guys coming on and tuning into this. I think we've got a good number of likes on here. We're over 100 as well. And there's still 152 of you on here. But guys, yeah, really do appreciate it. Let me know if there's anything in particular that you do want us to talk about on these live streams. Accounting, tax is one that MC's mentioned. If there's any others, please do let me know. And we'll see what we can do. Please keep an eye out for the live stream. I will post about that hopefully next week. Just looking to confirm a crypto expert so we can really get into the nuts and bolts of crypto. That's going to be really, really interesting. It will be on a weekend. It's going to be a 5-hour stream. So I would really, really appreciate your support with that. It's going to be a long stream. So yeah, please do share it once I post it as well. And there'll be a little bit more news on the startup that I'm now part of as well to help people, first-time investors, use their time and the biggest asset that they have available to them in the wisest way possible. So thanks, guys. Appreciate it. Have a good evening, whatever it is that you end up doing, and have an amazing week as well.